Welcome back to the Aerospace Executive Podcast. I'm really happy to have my friend of 5 or 6 years, Jon Lusczakoski, with me. Jon is a vice president at AE Industrial Partners. AE being one of the more focused and larger private equity firms focused on aerospace. Jon's been there 5 years now, Jon?
Yeah, a little over 5 years.
And you have seen like a meteoric rise through the business. You've done well.
Yeah, it's been an exciting couple of years. When I joined the firm, we just closed Fund 2, managing around 2 billion, and now managing about 5.5 billion. And I'd say conservatively, we probably quadrupled the team here, moved into a new building. So, been a wild ride for the last 5 years, that's for sure.
You guys have you've certainly brought on some powerhouse. When I look through the who's who of AE Industrial Partners, it's a powerhouse cast of characters in there.
Yeah. We've been fortunate to bring in some good operating partners, strategic partners, friends of the firm. I think a lot of that is really what the firm can kind of pride itself on, which is that family business, family roots that we have from David and Brian Rowe. There's almost no one in the aerospace industry that doesn't recognize the Rowe last name, given Brian's ties back to GE. And, you get a lot of people that are well connected to David Rowe. And, when he picks up the phone and says, look, I'm looking in this industry or looking for help here, you tend to attract a lot of, really strong candidates. So it's been good. We definitely have a deep bench.
It's been fun to watch the growth for sure, but it's been fun to watch you grow though. I mean, look, at the end of the day, you and I met. I think you were an engineering manager at Williams Engines 5 years ago, right?
Yeah. I was not thinking about working at a private equity firm. I can tell you that much. So lots changed from then to now.
And some strange guy named Craig reaches out from the blue and says, "Hey, we got a good deal for you."
Yeah. You were, I remember you were looking at me for one of our portfolio companies, local out in Michigan. And then we had our first kickoff call. And then you said, you know what? I think you'd be a better fit for the company that owns this company, not the initial role. And, one thing led to another from there. And here I am. So
let's talk about a little bit about how you got there. I mean, you got a great background. Talk a little bit about your background.
Yeah. Definitely atypical for someone in my role, which can help from time to time. But I got my mechanical engineering degree at Michigan State. I grew up with basically engineers all in my family. My grandpa, owned a design manufacturing engineering company that kind of specialized in robotics. Family business. My dad worked there. My uncle worked there. I went there basically every weekend growing up. So kind of was in my blood, you could say. So got the engineering degree. Always had a lot of passion around aerospace, just like any kid growing up, rockets, planes, helicopters, anything like that. So was fortunate enough to get a job at Williams International, in Metro Detroit. Was able to stay close to my family, which was nice. And, started there. First 2 years, did a rotational program. So moved through, different disciplines inside of Williams, did everything from, finite element analysis to combustor design to R&D testing, which was good because you get a diverse feel of, what that company does. And, you kind of learn, when you're designing parts, you've through that rotation program actually worked on the manufacturing side. So you have more appreciation for the tolerances you call out and, how things are actually made. So finished up the rotation program and really enjoyed the R&D testing side of things. Inside of Williams, they do a lot of developmental work, a lot of government work for their customers. And then in that same team is also the basically the FAA certification team. So you're certifying all their engines before they're actually hitting production. And that was a blast. I worked there for, after that rotation program for another 5 years, kind of moved up, helped certify a few different engines, helped integrate those engines into, different applications with a few of our different customers. Some on the military side via kind of drone applications, and then also through, international customers doing, light military trainer jets. But what's nice about that role is you touched everything. You're integrating the full engine. So you're worried about software, you're worried about, wiring harnesses, you're worrying about the physical mounts, and you're kind of that middle point between all the customers' concerns and then all the touch points over at Williams in terms of, who's going to do that work or who's going to figure it out. So got to touch a lot of things. It gave me a really good insight into kind of not only how, the engine side of things works, but also, the business side and keeping your customer happy, that sort of thing. So through those 5 years, I went and got my MBA at University of Michigan. Did that at night and at the weekends, which was challenging because I was working a lot of hours at Williams on everything I just kind of went through. And then, you add to that, leaving work, going to start class at 7 or 7:30 at night, sitting through 3 hours of lecture, driving an hour home. It made for some long days.
It's a long day. Yeah, that's a long day. It's and that's a great program too. So
great. I mean, fantastic school. Again, a little weird because I went to Michigan State for my undergrad and then Michigan for my MBA. So, house divided, but ended up being great. I finished that program in 2017. Then I worked for another year at Williams. Didn't exactly know where that was going to take me. I had a few opportunities pop up. Nothing really seemed to, be a great fit. And then obviously, you reached out and, that turned out to be a pretty good opportunity that resulted in me coming here. So
and there you go. And now you've been, you kind of started as an associate.
Yep.
Couple promotions, but along the way, you've been a big leader. I mean, which you've been a big leader in AE's push into the space programs, space components, Redwire, a couple of, would you say 7 or 8 other companies integrated into Redwire and Beyond?
Yep. No, it's been good. When I joined, the firm closed Fund 2. So we had, 1.4 billion of capital to go deploy, kind of right around 2018. Before that, the firm focused, I'd say, a little more in commercial aerospace. We were still diversified in a few other things, but there was more concentration there. So for Fund 2, part of that thesis was to diversify into other end markets, one of them being space. So when I came on, among many of the other things that I was doing, I was tasked with, hey, go map out the space industry, get some info on it, prepare a presentation for the firm, give us your view on, where you think it would make sense for us to invest, and, let's sit down and have that conversation. So, I took with that and kind of ran with it. Obviously, I love the space industry. There's a ton to dig into there. Went to a couple of conferences, talked to a lot of people. And, prepared a whole PowerPoint presentation, reviewed that with our investment committee, and kind of pitched them a thesis of, hey, let's focus on kind of the critical components of the industry. I didn't want the firm to invest in one single constellation or, one specific company or one specific type of technology. I just saw too much risk there. So I kind of pitched this idea of, hey, let's provide the picks and shovels for the gold rush. We'll let everyone else go hunt for gold. We'll supply all the critical stuff that you need. So that's kind of what we went and did. The first deal that we did was, a company called AdCol. They develop or manufacture, sun sensors and star trackers for navigating satellites. Been around for 60 years at that point. So they had great heritage. They go on to almost every application. That kind of was our foundation for the Redwire thesis, and then kind of stuck to that thesis with that platform, from then on, doing solar panels and flight computers and composite structures and deployable antennas, things that, whatever type of satellite's going up or whatever, venture idea that somebody has, they're basically coming back and buying all this stuff from Redwire. So, as the industry grew over those, call it last 4 years or 5 years, Redwire's basically been growing at that same rate, if not more. So it definitely worked out pretty well. We ended up taking that company public via SPAC about 2 years ago. Now they're publicly traded, which has its own fun. And then, while all that was going on, we were, busy investing in other parts of the industry. We're the majority owner of Firefly, which is on the launch vehicle side. They just had a successful second launch almost a month ago now. So they're making great strides. And then we're the majority owner of York Space Systems. They manufacture satellite buses. So, think of full satellite systems. They actually buy a lot from Redwire, kind of going back to that thesis of needing those critical subsystems. And then we've invested in like I said, probably a dozen other startup companies, we're minority investors in a few others. Really kind of built out a whole portfolio now, from, subsystems to launch vehicles to satellite buses, which, for a firm like ours, gives us a really good aerial view of the whole market, where it's going, where the pinch points are. And that obviously helps lead to, future investments. So it's been good, been a busy 5 years, but been exciting on that side of it.
No doubt. I mean, you see space. I mean, obviously, a lot going on in space right now, a lot of satellites,
Yep.
SpaceX, everybody knows, SpaceX and Blue Origin, kind of the sexy, shiny objects there. But on the satellite side of the house, I'm sure the constellations are not getting they're not decreasing in demand. And as things start to move into the atmosphere, are you guys just seeing kind of that gold rush that you expected to see?
Yeah. It's been really good. A lot of it is government funded. There's a little bit of, if you take out, SpaceX, Starlink, if you take out like what will be the Amazon Kuiper constellation, some of the stuff around Blue Origin, there's a finite number of successful commercial space companies. It's a harder business model to prove out than others. It's very capital intensive. You got to build all of your satellites. You got to spend a ridiculous amount to get them launched. So it's a lot of upfront costs before you're actually kind of proving out that business model. So on the commercial side, it's moved slow, but we've kind of always expected that, even years back. Eventually that market will continue to grow as launch prices go down and down. It makes the access to space, that much easier. So, a lot of our portfolio companies focus on the government side, which, right now, a lot of that work is going through, what's called the SDA. They're put up basically a whole plan of tranches of satellites that they want to put up into space, over the next decade and support it for multiple decades. And that's generated a lot of work for our companies, which has been really good. So, it's nice having, revenue coming in from the government side, because it's, relatively ironclad, right?
Mm-hmm.
You've got good contracts, good milestone payments. And that helps on the credit side, right? So as we go to, build the full capital structure for our deals, it's a lot easier to, go try to get debt or go get incremental debt when you can point to, large government-backed constellations or programs, compared to, work that's being done on the commercial side where, hey, you might be awarded a contract, but it's pending that company finalizing their funding. That's tough to go get debt against that. But, when you've got stuff that's backed by the government and it's already up, being funded and continue to be funded, it makes those conversations a lot easier.
I got to think with all the drama in the world right now, as we were sort of talking, Israel, Ukraine, China,
Yeah.
you name it. I don't think the demand for the government stuff is going down anytime soon. So you're probably in a really good spot.
Yeah. Yeah. I mean, they say, space is kind of the last frontier. If you think about, land, sea, and air, space is kind of that last one. And I think it is a contested arena, and it's going to continue to be more contested as, China and Russia continue to want to push forward in space for their own reasons. We know that their satellites are tracking our satellites. They're wanting to know what we're looking at. We're wanting to know what they're looking at. And space is obviously, a huge arena for them to be operating in. So, yeah, I mean, we're very bullish on it. It is, some people think, space is just a buzzword and it's going to go away. It's not. It's like saying the sea is going to go away. You don't need to worry about shipbuilding. Like it's here. It's the new arena that we're going to be operating in. I think we're in the very, very early innings of it, which is what's exciting about, our firm is, again, we've got that little bit of an edge up on other private equity firms, at least, just given the years of experience we have in it so far. And, as you extrapolate that out, for the next couple of decades, I think it'll give us a nice edge up. So yeah, I could be biased, but I don't think it's going anywhere.
I'm with you there. I tend to be with you there. Let's shift back to you a little bit. So obviously, Williams Engines, engineering manager there. You're leading a team of people. You got the MBA.
Yeah.
Well, what was the goal when you went down the path? You're still young. Mid-30s. I suspect one day we'll see the Jon Lusczakoski, 40 under 40 somewhere. What was the goal when you started out? What was you've obviously had a lot of success in private equity. What surprised you as you made the move? What did you find pleasantly surprising? What were the challenges you were kind of scratching your head on going, holy crap?
Yeah. Let's see. I mean, originally what I made the move for, I loved engineering, just didn't really see the career trajectory, I guess, that I was, hoping for. You can obviously be very, very successful in engineering, but I just kind of, at least at that time, felt like I saw my next couple decades ahead of me, and it didn't exactly line up with what I was looking for. So that was the reason behind the MBA is, look, let's go get something that will diversify myself, prove to folks that I'm not just on the engineering side. I can communicate well and understand the finance side, talk the business language. A lot of that I knew, but, getting the MBA just kind of validates it. Right. So that was the original goal there. Then obviously with the switch to private equity, I think I probably wouldn't have typically got a job at too many other private equity firms. The big edge that I had with, AE was the fact that they specialized in aerospace and defense. So, they looked at my resume and said, look, Dave Rowe, one of our managing partners, was like, look, I can teach an engineer finance, but it's pretty hard to teach a finance guy engineering.
Right.
That hit me pretty hard, right? Like all I got to do is kind of dig in here. The finance stuff it's not, by no means is it easy. And I'm never going to be as good as some of my peers who, have a decade of experience in finance. But you can commit yourself and pretty quickly learn kind of how that works, and definitely learn enough to be dangerous. So, my first, call it 18 months here, I was in the associate role. I was, doing what needed to be done in that job, but honestly, probably spending 2 to 3 times as much time on what I was doing just to make sure that I learned it and understood it. Because I needed to teach myself some of this stuff, and make sure I truly got how, our models work and how our finances play into the broader transactions that we were doing. So that coming out of the gates was by far the hardest. I learned, just like in anything, I learned that at Ross during my MBA, but it's on it's on paper, it's through school, it's not the same thing. So doing that for real, having my bosses at that time giving me tight deadlines, that was, I knew that part was going to be tough, but that was by far the part that probably caught me the most off guard, just having to keep up with, the speed that this industry works at. It's a lot faster than, my days back at Williams. We used to talk about projects on the monthly timeline. Hey, here's an engine certification that we're going to do that's going to take 18 to 24 months. We close deals in sometimes as short as 45 days from, meeting someone, signing a letter of engagement, and working through, 5 or 6 streams of diligence, and then, closing the deal. So it's very fast paced, which again, that took some getting used to.
Yeah, I mean, it's not as easy. It's a lot of combing through books and going, all right, what are the hurdles here?
Yeah,
I mean, that's everybody thinks it's easy. Well, it's all good. Yeah, it's really easy to have a deal go south on you too if you don't.
Yeah,
you miss some diligence. It's really easy to have something go south on you real quick too.
Yeah, absolutely.
So I take it you're a master. You learned the Excel spreadsheet. You're a master at Excel right now, right? Is that what you're telling me?
You learn the ins and outs and how to do things quick and be efficient. So yeah, I got a lot more respect for that now than I used to.
So now as you're combing through balance sheets, profit and loss statements and balance sheets, are you comfortable with what you're looking at, or do you?
Oh yeah. No, I really am, and I think one of the thing that's nice about my background is, I have the ability to look at the finances and kind of see through it a little more. And not just the finances, but like, as I look at a whole company, I'm not just looking at it from the finance side, right? You have some people that they open up a new investment book and skip right to the last section, which is finances, because that's where they're comfortable. I've run teams, I've been inside of businesses. I know how a machine shop works. I know how scrap rates work. I know how engine testing goes. I know how schedules can be delayed. So, as I'm meeting with management teams and talking through opportunities or talking through their own company, I tend to pick up on a lot of things that most don't. If someone's showing a, miraculous recovery from, their scrap costs or something over the next 3 months, and they're, hey, we're going to go from 30% scrap on this program to 5% scrap. Right. Like I'll just call that out right away. Right. So, it looks good in the numbers, but, I'll immediately kind of poke people on that, get the real story. And, in some things, you definitely get I've definitely had some managers or owners or sellers where, I'll ask a couple of those questions and they'll kind of like turn their head and be like, what'd you do before AE? Like, there's no way you would know how to ask me that question if you were in finance. And, that's when I'll typically kind of reveal my background, but it definitely is a nice, I'll call it competitive edge, being able to look at the finances, look at the business as a whole, kind of talk the talk with the right management teams. It gives you a kind of a better full picture of things.
So now obviously you grew up in a family business, but then when you were in B school or somewhere between your undergrad and B school, you had your own little thing going too.
Mm-hmm.
You learned the entrepreneurial, you got a little bit of entrepreneurial spirit with the little online marketing company.
Yeah. I was always hungry. I had a couple of things going. I tried to develop an iPhone app with a couple of my, high school buddies, basically. And that was difficult. I mean, we were trying to do it inexpensively. So we were using programmers over in India. So we were, designing the app, trying to help them code it with a, 10 or 11 hour time change, whatever it is between us and India. So I was up at, 1 a.m., 2 a.m., talking to them, trying to get stuff to work. So that was my first thing that we tried. Didn't get a ton of traction there. Then, tried to build a business called Taftware, where we were selling, expensive kind of custom barware. So, glasses, whiskey glasses, shot glasses, coasters, wine corks, things like that. It was good, but again, it was, I'll probably say underfunded, and it was hard for us to get a bunch of traction there when some of those things cost $200-300. So, but it was all American made, and we were proud of it. And we learned a heck of a lot, because even though it's small dollars, small problems, you're still thinking through things and learning what not to do and stuff like that. So it was good, especially at that time. It allowed me to kind of cut my teeth on some stuff, and I'm sure that helps with what I'm doing today, even if it's in a small amount or whatever. It's kind of all part of that building process.
I was going to ask you, small family business, kind of starting your own little entrepreneurial thing. Did that help you make the move with private equity? Does that help you do the due diligence on the smaller companies that you guys are looking at versus the folks who are inside of Honeywell or bigger OEMs?
Yeah. I mean, the family business is kind of, I almost say twofold, right? So, I grew up with, my dad working for my grandpa, and that family business dynamic. So knowing what that's like, seeing that from, definitely from the inside. And then, Williams is another large family business. Sam Williams was the founder of that business, now run by Greg Williams, and similar dynamic, right? Obviously much, much larger, but a family business nonetheless, or a private business nonetheless. So, I moved up and up inside that company to appreciate the challenges, appreciate, it's not always as good as it looks, right? So as I go to look at new companies, it's just like selling a house, right? You take pictures in the perfect light, perfect setting, perfect time of year. You paint over the water damage, that sort of thing. Being inside a family business, like Williams, and knowing what it's like, you start to learn where to look for the water damage. Going back to my other example, not saying that it's always there,
Right.
but you just have a little bit of an eye of, you may hear something, someone may mention something, or you'll see something into the numbers, and it reminds you to double click and look at that and think about that a little bit more, where, maybe someone who's from a larger business or public company or something like that, where they're kind of only worried about their P&L, or, their little cog in the bigger wheel, it lets you kind of think about it a little bit differently.
Yeah, no, I mean, look, there's a different, this is the one thing, I talk about quite a bit. There's a huge difference between, that big ship captain and the tugboat captain.
Yeah.
And understanding how the tides shift is a big thing. And now you guys as a fund are dealing with a lot of smaller businesses, though.
Yeah.
I mean, when you walk in, are you, and I know, things change. Are you generally pretty happy with the management structures that you see in there? Do you leave them in place, or do you start to, how do you account for and adjust for, small businesses that want to get bigger?
Yeah, I mean, we do probably about 85% of our deals, we call them proprietary, deals, right? So it's second generation businesses, family businesses, or a management team that bought it from a previous owner, but still kind of operates it themselves. So yeah, it can be interesting sometimes, because, unlike a more mature business, you may come in and, like you said, the management team's a bit shaky, or, you identify one person who, they're wearing 5 or 6 hats. And if that guy, gets hit by a bus or wins the lottery tomorrow, right, that this whole operation could stop. So we spend a lot of time digging in on that, making sure that the team that we're investing behind is strong. And if not, immediately identifying where those holes are and making sure that we bring people in. Obviously we've used you for that quite a few times. But yeah, that's a big part of what we do is, mapping out the team. And then, as we look to grow the investment, making sure that team is the right fit for that growth, because they may be a good, strong team today at size X, but obviously a lot of our strategy is to organically and inorganically grow that business. So they may be doing 20 or 50 million of revenue today, but our goal is to get that to 200 million of revenue or more. So that's pretty significant growth, especially over what can be as short as 3 to 5 years. So again, it's looking at that team, making sure they're capable today, but also capable of growing into a business like that where roles start to expand, and there's definitely a lot more that's asked of them.
Yeah, no, and like you said, it's hold on to your hat. Stuff moves fast. Stuff moves fast in private equity. So
sure does.
So, yeah, look, last thing, and we'll kind of wrap it up. Appreciate you being on today. You're still a young guy. Go back 8-10 years, or some people that are coming up behind you. What advice would you give to that person who's 25, 26, 27 years old, looking to grow their career?
Yeah, I mean, look, do what you love is what a lot of people say, but it's true. I mean, I truly love what I do here. It helps in every aspect, right? When you have long hours, or when you're working late, or when you're working on 5 things at once, if it's all topics and things that you love to be doing and love to be working on, it makes it go, a lot faster than being stuck on something that you don't want to be doing. So, like I said, going back to even my own situation, that was part of my reason for getting the MBA. Is it's not that I didn't love what I was doing, but I knew it wasn't going to be the long-term answer, and I knew I needed to make a change to kind of get to somewhere where I'd be, appreciating what I was doing more. So that'd probably be my single thing is, be honest with yourself, try to figure out what you really like to be doing, where you really like to be spending your time. And, that's the best way to, truly become a leader in that industry, because you're gonna, if you're doing what you love, you're gonna want to read about it. You're gonna want to meet other people in that industry. You're gonna want to go the extra mile because you're interested in it, not just because you have to do it for your career. I go to conferences. I read articles on space every day. Like I just want to read and educate myself on that. I don't do it because it's specifically helping me. That'd be the one thing. And the second thing is, look, when you're in your mid-20s, like that is the time to grind. I mean, that's what I was doing, right? I was working a full-time job. I got my MBA, and I was working on some of those startup things that we were talking about. So I was truly grinding, but I don't need a lot of sleep now. I definitely didn't need a lot of sleep then. And, I wasn't wasting a bunch of time, playing video games or doing other things. I was focusing basically on, work, school, and entrepreneurship. So you work on enough things, something tends to take off. So
I'm with you.
That'd be my second piece of advice.
I tell the college kids that I mentor, you can learn a lot reading the Wall Street Journal 20 minutes a day.
Yeah.
You don't have to live. It doesn't take hours. Cruise some headlines, read some interesting articles, learn something. It doesn't take a lot. If your boss won't send you to a conference, reach into your pocket and pull out a credit card and pay your own way and go meet some people. I mean,
one of my, always be a student, right? Be a student of the game. That's what you got to do. Always be learning.
I love it. Jon, hey, thanks for coming on.
Happy.
Good having you.
Having me. It's a great conversation.
Congratulations on all you've achieved.
Thank you.
At AE. It's been a fun ride. I've loved watching it.
Yeah, no, likewise. It's been good, and a lot more to go. So appreciate it.
Cool. Look forward to staying in touch. Talk soon. I hope you enjoyed the latest edition of the Aerospace Executive Podcast. You can reach out to me directly, Craig at NorthstarESG.com, or check us out at www.northstaresg.com. You can subscribe to this podcast on iTunes, Stitcher, Podbean, or on YouTube. Just do a search for Aerospace Executive Podcast. Thanks again. I'm Craig Pitt.